If I ask you what is common between Honeywell Automation, ABB Limited, Thales Global and Bharat Electronics? Well, apart from being top engineering companies, they have one common partner in electronics manufacturing sector. It's Cyient DLM, a subsidiary of Cyient Limited, which is a leading engineering service provider with over 3 decades of domain expertise and a big multi-bagger company with 8 times return in last 10 years. Hey everyone, my name is Sahil and this is my Personal Finance Academy. Cyient Limited has launched the IPO of its subsidiary Cyient DLM, which is a leading electronics manufacturer. Well, it is not a hidden fact that electronics sector in India is still in nascent stages and poised to grow at a very fast rate. Now, personally, when I look at the IPO, I don't just invest for listing gain. I always look for long-term multi-bagger potential. And like I said in my previous analysis of IdeaForge, it's not just relying on IPO lottery, but more about identifying fundamentally strong companies with leadership in the sunrise sector so that you can keep them in your watch list and invest systematically post-IPO. And Cyient DLM looks like one such fundamentally strong company with huge return potential in next 5 to 10 years. So in this video, we'll understand its business model, leadership, future growth prospects, key risk, and IPO details along with valuation. But before I proceed, this video is only for educational purpose. I am not a SEBI registered advisor. So kindly do your own research before investing. Alright, let's get started. Cyient DLM was incorporated 30 years ago in 1993 as an electronics manufacturing company, and today it is a leading EMS, that is electronics manufacturing service provider, with a focus on the entire life cycle of a product, including its design, build and maintenance. It is a dominant player in LVHM category that stands for low volume, high mix. So one of the segmentation in electronics manufacturing is HVLM and LVHM. Basically, HVLM stands for high volume, low mix, and where few types of assemblies are produced in large quantity. It includes manufacturing of your consumer electronics like your TV, washing machine, fridge, etc. Then your mobile phone, computers, laptop, etc. Example of company in HVLM segment include Dixon and Amber. And LVHM stands for low volume, high mix. It has high emphasis on quality and customization that changes according to customer requirement. So LVHM has low volume but higher margin as clients prefer to pay higher prices without compromising on quality. It includes electronics manufacturing in your aerospace sector, medical equipment, then your defense sector and so on. And Cyient DLM falls into this LVHM category. And this is the reason its clients include the likes of Honeywell Auto, an American company which is a leading automation and software solution company in the world. Then ABB Inc., a Switzerland-based company which is again a pioneer in robotics, machine automation and your digital services. Then Thales Global, a French MNC that specializes in engineering for aerospace, defense, transportation and your security sector. I mean, these companies are world leader in the advanced engineering space and they are client of Cyient DLM with an average relationship of 11 years. It itself speaks everything about the business quality of Cyient DLM. Now, Cyient provides its services in two forms, B2P, that is build to print, and B2S, that is build to service. In B2P, client would provide the design for the product and Cyient DLM would manufacture the product. In B2S, Cyient DLM would provide both design and manufacturing. Its solution include your printed circuit board assembly, which is the heart of electronics device where multiple components are assembled. Then it includes your cable harnesses, which is used for transferring of signal or electrical power. And third is build box. Now this is very important. Build box is the final product where the OEMs put their logo. For instance, if Cyient DLM is manufacturing a medical diagnostic equipment for Honeywell Auto, then once the product is ready, Honeywell will put its logo and sell it. So within build box, it builds electronics components like your cockpits, then your in-flight system, landing system, and your medical diagnostic equipments. Company has 3 manufacturing facilities in Mysore, Hyderabad and Bangalore. Mysore facility is 65,900 square feet and engaged in your aerospace and defense manufacturing. Then Hyderabad facility is 1.5 lakh square feet and engaged in your medical and healthcare technology. Then Bangalore facility is 12,200 square feet and engaged in high precision manufacturing. A total of 2.29 lakh square feet of area. Now, if you look at company financials, its revenues have grown from 628 crore in FY21 to 720 crore and now at 832 crore. Please note that these numbers are in million and we are talking in terms of crore. So revenue growth has been very average in last 2-3 years. Company operates on a gross margin of 15% and EBITDA margin of 10.55% in FY23. It has improved from 7.3% in FY21. Please note that while the EBITDA margins are looking lower, this is common in all electronics companies. In fact, Dixon EBITDA margins are just 4%. Its EBITDA in FY21 was 45 crore that got increased to 84 crore and now at 87 crore. Net profits have grown from 11 crore to 39 and fell down to 31 crore in FY23. Company is consistently generating free cash flow of 7 crore, then 40, then 44 and has total cash of 167 crore in FY23. Its ROCE in FY21 was 11.48% that got increased to 17.5% and now at 13.4%. Currently, company has net borrowing of 314 crore against equity of 197 crore. So debt to equity is 1.6, but please note that company has cash balance of 167 crore, hence net debt to equity is 0.7. And this would reduce further as company is planning to utilize 160 crore rupees from the IPO for repayment of its borrowing. So overall, the revenue growth has been average so far and profitability is also average. But the key here is order book. It has an order book of 2,432 crore as of March 2023. This order book has grown exponentially from 906 crore in FY21 to 1,202 crore and now at 2,432 crore. Please note that its revenue for FY23 was 832 crore. So current order book is 3 times its revenue, that suggests good growth in the future. Moreover, company has a very low capacity utilization. Mysore capacity utilization is just 38%, whereas its Hyderabad capacity, which is the largest capacity by the way, has just 7.6% capacity utilization in FY23 as it is a new setup and full-fledged production is yet to start. So going forward, as the capacity utilization would improve, the profitability will also improve. Now if you look at revenue breakup by FY23, 20% contribution is from aerospace sector, 38% contribution is from defense, 16% is from medical and 25% is from industrial division. So very well diversified business across all growing industry. In terms of revenue breakup by products, 63% revenue is from your PCBA, which is printed circuit board, 1% from cable harness and 32% is from build box. On the leadership side, Cyient DLM has a very strong promoter pedigree of Cyient Limited, that is a leading technology solution company with 3 decades of experience and a great wealth creator for its shareholder. Cyient DLM also has a very strong leadership team, including Anthony Montalbano as CEO, who is responsible for providing strategic direction to the company. Then Rajendra Velagapudi is the MD. He is responsible for manufacturing operation. Company also has very strong board of director. So overall, the leadership is top notch. Due to time constraint, I don't want to stress this further, but would suggest going through their leadership detail from the website. Now let us try to understand future growth prospect of Cyient DLM. As far as future is concerned, some of the biggest trends for 21st century include your electric vehicle, artificial intelligence, high-speed 5G internet and Internet of Things. And all these emerging technologies have one thing in common. They need semiconductor chips. In short, if the future of world is digital, then electronic sector is the backbone of this revolution. Now specifically if we talk about sectors where Cyient DLM is focused, first is aerospace and defense, where key drivers would be smart factory improving efficiencies and defense contract including advanced military capability. Then in medical sector, IoT, wireless and artificial intelligence would play a crucial role. So EMS industry in medical science is going to explode in the future. Likewise, in industrial electronics, the key focus is on automation and robotics. And again, EMS industry would play a crucial role. And Indian EMS industry is the fastest growing among all the countries globally. One of the biggest growth driver is global MNCs trying to reduce dependency from China, and India has emerged as a great alternative. And even the Indian government is highly focused towards electronics manufacturing. It is already a part of PLI scheme, and recently Indian government has announced $10 billion of incentives to create semiconductor ecosystem in country. And let's not forget, we are a country with 140 crore people, so that itself creates huge demand for consumption. So it looks like all stars are aligned for exponential growth in EMS sector in India, and personally I am very bullish on EMS industry, which is still in a nascent stage and bound to explode in the next 5 to 10 years in India. In terms of growth rate, as per research, EMS sector in India would grow more than 3 times in the next 4 years. In fact, I am planning to create a separate video on this EMS sector and top stocks from this sector. Let me know if you want me to do a separate video on Indian EMS sector. Now, as far as Cyient DLM moat is concerned, first of all, electronics manufacturing itself is a very complicated business. It requires highly specialized knowledge to enter into the sector. On top of that, Cyient DLM is into LVHM segment, which is a low volume and high mix for your aerospace, defense and medical equipment, where clients do not switch their partner frequently as they have stringent quality and qualification requirement, and they typically operate in highly regulated industry. And Cyient DLM already has very strong relationship with world's best engineering players with average of 11 years. So it has built a strong moat around its business. Moreover, Cyient has not just built the manufacturing capability, it also has the design capability. So it provides end-to-end manufacturing right from design, development, build to maintain. And remember that Cyient DLM would also benefit from its strong parentage of Cyient Limited. Now let us look at the key risk. So first risk is client concentration risk. Company had 35 customers in FY23, out of which 5 customers accounted for 67% revenue and top 10 accounted for 91%. Company also has high inventory outstanding of 186 days. In future, any loss of business from its top clients can adversely impact the Cyient DLM business. Although company has very strong relationship with its top client. Moreover, inventory management is a key aspect of their business that is directly linked to their profitability. Any failure in managing inventory can also impact the bottom line. Then second risk is raw material risk. Company depend upon third-party supplier for raw material, including your semiconductors, capacitors, then sheet metal, then cables and so on. These raw materials are procured from all over the world, and we've recently witnessed supply chain disruption and unavailability of semiconductor chips. So this risk will always exist for the entire EMS industry. Then third key risk is competition risk. Although there are high entry barrier in Cyient DLM business, there are already other established players, including your SFO technology, then your Bharat FIH, then Avalon Technology, Sirma SGS Tech, then your Elin Technology, then DCX System, then Centrum Electronics, then Keynes Technology from India. And there are many established competitors globally, including your Foxconn, Flex, Petragon, then Jabil and so on. This competition risk will always put pressure on the margins of the company. So Cyient DLM IPO date is between 27 June to 38 June. Issue size is 592 crore, which is a completely fresh issue. So promoters are not selling their stakes. Money raised from this IPO would be used for funding working capital of 291 crore, then capex of 43 crore, then your repayment of borrowing worth 160 crore, and then 70 crore for inorganic growth through acquisition. Its share price band is between 250 to 265 rupee and one lot include 56 shares. At higher price band, company would command a market cap of around 2,100 crore and a PE ratio of 66. Now that is neither too high nor too low. Valuation is looking reasonable. If you look at other peers in the sector, Keynes Technology has a PE of 92, Avalon has a PE of 68, DCX has a PE of 35 and Sirma SGS has a PE of 67. So all the EMS players command a high valuation due to exponential growth prospect. I expect this IPO to get very positive response. For listing gain, you can check grey market premium, and for long term, this is certainly worth keeping in the watch list, and if there is not much jump on listing day, then worth adding in the portfolio. If the share price jump a lot on listing, then keep it in the tracker and invest when the valuations are looking decent. By the way, recently Cyient DLM raised 260 crore from 20 anchor investor ahead of its IPO, and it witnessed some marquee names, including your Nippon Life India Small Cap, then ICICI Prudential, then SDFC Mutual Fund, Tata Infrastructure Fund, LIC Mutual Fund, then Amansa Holding, DSP India, Aditya Birla, Edelweiss, then your PNB Baripas, Kotak Mutual Fund and so on. It again speaks everything about the future prospects of the company. Overall, Cyient DLM is looking fundamentally strong with strong presence in LVHM business of EMS industry with top international clients including the likes of Honeywell Auto, ABB, Thales Global and Bharat Electronics. The EMS industry in India is on the verge of explosion due to China Plus One theme and Indian government focus on boosting EMS industry growth. And Cyient DLM should be a beneficiary of this growth. It has a strong moat of high entry barrier in the sector with strong relationship with its client and a very strong promoter pedigree. Company is launching its IPO at a market cap of around 2,100 crore at a P ratio of 66. That looks reasonable considering its strong growth prospect. And this IPO is worth applying for long-term wealth creation. Although there is a strong competition from existing players and other risks including your raw material fluctuation and high inventory along with lower capacity utilization. Now tell me in the comments, are you going to apply for this IPO or not? And let me know if you want me to discuss EMS industry in detail. I'll see you next video. Till then, take care.